Well, air travel is still not quite back to normal post-pandemic levels, but prices do at least seem to be coming down. John Gradek is an aviation expert and faculty lecturer at McGill. Thanks for being with us.
My pleasure to be here.
So that price relief probably does make a difference, but I actually wanted to start, John, kind of big picture with the question of whether you think our current competitive landscape is serving Canadian travelers. Do we have the airlines in place that we need to give that kind of competitive feel?
I think so. I think that we've got four carriers that have got some presence in Canada that are reasonable. We have Air Canada and WestJet, of course, that have 80% of the market. You have Forder with about 10% of the market, and Flair with about 7 or 8% of the market. So with those four carriers, we have sufficient competitive practices in Canada.
Of course, one of the things we saw in the pandemic was a lot of capacity coming out of the industry, especially Air Canada. And it said it would take years to get back, and they weren't lying. It's taken a long time. Are we back? Do they have the flights in the air and on the ground that they need to service the market?
I think so. I think that, they're about 10 airplanes short of what they had pre-pandemic. And at the pandemic, they basically, discarded of their 24 767 aircraft, and they've managed to pick up some smaller gauge airplanes in the meantime. So they're still short of capacity, but they're flying the airplanes harder. In operational integrity, on-time departures are not good. They're pushing the airplanes pretty hard, but they're getting close.
We know one of the parts of the market that travelers, certainly for tourism, would know best is the real discount end of that market. That one does seem to be more in flux as over time, with different brands coming and going and being acquired. What's the health of that discount, especially the kind of sun destination part of the market?
I think that we're going to see a major shakeup coming up in the next few months in the discount market, coming primarily from our friends over at Porter. Flair has been at 20 airplanes, and they're going to stay there at 20 airplanes. Porter is growing its fleet significantly. They were at 25 airplanes last fall. They'll be at 45 airplanes by the time Christmas rolls around. So a lot of those airplanes will be, in fact, deployed on sun markets, and we're just waiting to see how much competition they're going to give up to Sunwing or to Air Canada or to Transat.
It's interesting as we do see these kind of these fare wars, these really discount fares that then kind of threaten the very health of the industry. Could we do better on that front? Could we see a better kind of floor under ticket prices that allows for more enduring competition?
Yeah, I think so. We went through a domestic, mess this spring when Lynx decided to pull the pin on their operations, and now is due basically the price competition and something they call some illogical pricing. When you have ultra low cost carriers like Flair and Lynx go after each other, which was the case, they all gravitate to the lowest common denominator of price, and that just drives the economics of flying airplanes by Flair and by Lynx to uneconomical levels. And Lynx pulled the plug first, and now you see Flair operating with much higher fares than they have in the past, and they are more financially stable.
Yeah, we've only got about 30 seconds, but we've also seen destinations come off, and that can really hurt those as tourist destinations. Do we expect some of them to come back, or are the airlines sort of rethinking where they can fly?
Yeah, they're rethinking where they can fly. You've got Tulum in Mexico that's showing up now on the radar screens quite a bit. It wasn't there 2 years ago. So that's coming up. Cancun is still strong. Florida is strong. Vegas is still strong. So, there's not a lot of new markets showing up in the sun destinations. It's just a lot more capacity and a lot more price competition.
John, it's so good to have you for this. Appreciate your time today.
My pleasure, Amanda. Have a great day.
John Gradek is an aviation expert and faculty lecturer at McGill. It does seem there are signs of health for hotels, travel increases, and the luxury end of the market, both holding their own. Susie Grynol is a vice president at Marriott International. Thanks for being with us, Susie.
My pleasure. Thanks for having me.
So I want to start with whether you're back, whether, the business everywhere saw a big setback, obviously through pandemic, but it took a while to recover. Or would you say you're back to so-called normal and regular growth?
So coming out of COVID, the good news is that people continue to prioritize experiences over material things. And that really has been the driving force behind our recovery and growth. But the growth story is really on the leisure side. So we saw a 36% year over year increase Marriott did for 2023. So that's a great story. On the business side, a little bit slower. So we break that down into business transient, and so that's people traveling for business. That group we should see recover by the end of this year. On business events, a bit slower, so 2028, we're forecast a recovery by then, but across all of these metrics, certainly moving in the right direction.
And when you look at what's driving the business, I mean, the business traveler, of course, that's a long time for full recovery, I would say, but what are the trends you're seeing that are getting people into rooms?
Yeah, so I'll touch on global and then maybe domestic. On the global side, we're seeing a big wellness trend. So people wanting to prioritize, their mental health and take a break and travel. And so we're seeing wellness, wanting to look at some of our properties that offer those wellness programs, like the Heavenly Bed or a menu that offers you to eat healthy. Related to that, we're seeing sleep tourism. So a big increase there, people needing to get a good night's rest. And a third of Americans are sleep deprived. 13 million Canadians are sleep deprived. And so people really looking to book into some of our properties that have sleep programs. So we're seeing a trend there.
Wow.
We're also seeing a bleisure trend. So bleisure, people are looking to book twice as many trips next year, where they're planning to go and actually work while they're traveling. And they are planning to stay longer than 2019. So those are some of the international, but domestically where we are seeing the most growth in terms of product development, we have 90 hotels in the pipeline. That's really coming from lifestyle brands. So these are products that allow people to have that kind of boutique local experience. That's growing. We're seeing extended stay growing for business travelers. And then select and upper mid-scale growing. And that's really, the families that are traveling with their kids to their endless activities and doing that on a budget.
I guess one of the interesting things when you talk about some of those trends and that bleisure, as you say, people who are working from home, but they can now do it in an exotic locale. Do you count on that going forward? Or do you say, well, there's going to be a lot of kind of forced back to the office, so that might be a short-term trend? How do you plan ahead for that kind of thing, I guess?
I think for the most part, businesses have adapted to that kind of trend. We certainly have. And so we do think that people are going to be working from anywhere in the world. And we are definitely seeing that show up in hotel bookings.
One of the things, obviously, that every traveler has felt, but every business has felt too, is inflation. A big, huge surge of it. Has that settled down for you across your business lines? Is it still a factor in some of your costs?
I mean, the cost of doing anything today, whether you're running a business or a household, has increased for sure. And so the hotel industry is not immune to those rising costs. And so it is playing into the increase in rates that would be higher in Canada today compared to 2019. But when you compare Canada to the rest of the world, we are certainly a discount. And then when you overlay into that the exchange rates, we're an even bigger discount for especially, our American friends, which is a very big segment for us. Those that are in the drive markets, we're seeing an increase there. Our international visitors as well, but even Canadians who want to take their dollar and spread it even further. Plus, there's lots of different options across the various brands for price points for people. And so whatever your budget is, there's an opportunity, I think, in Canada for people to still travel.
So good to have you, Susie. Appreciate your time.
Thanks for having me. Take care.
Susie Grynol is Market Vice President at Marriott International. Coming up, what are some of the best draws for would-be travelers in Canada? Stay with us.